earnings report in 5 minutes. Now, I want to start with a little story because obviously, starting his supervisor, and his supervisor came and he couldn't fix it as well. And the ship captain was it was very desperate, and he was walking on the docks and he saw this, but it took me 40 years to understand exactly how it's done. So this is a little story just to make you understand that, of course, you can't do this in 5 minutes. It's definitely possible. Is it possible to completely understand in a 30, 40-minute webinar? Probably not. But then again, we can start here laying the groundwork and giving you the basis that you need to start trading earnings reports like you should do and be profitable at it. So that's my goal in this presentation. This presentation is built so that every and each one of you can understand, even without prior background. So we'll go over earnings reports, what they are, why are they important, and actually I have a slide that talks about exactly what we are trying to do in this presentation. So let's start. I'll start with just a little bit about investing.com. You're all here, so I'm guessing that you all know the website. Investing.com is one of the fastest growing financial platforms. I think Investing.com is now ranked 490 something in the world, so really a big website. And basically, it has anything you would want if you're trading the markets. But again, I'm sure you all know that already, so I'll make it quick. This is usually a slide that I give when at conferences, or it's less obvious that people know who we are. So Investing.com, again, we are starting to give webinars. This is the first webinar that Investing.com actually gives. So for us, this is a proof of concept to see if there is demand, to see if people are interested in Investing.com webinars and not having only third-party webinars. So if you are, please be sure, you can ask questions, but you can definitely use it to send feedback and tell us what you think about the webinars, and if you think that this is beneficial for you and you think we should do it more. And just a little bit about me before I start. So my name is Clément Thibault. I'm originally French. I've been working at investing.com for 3.5 years now. I've been speaking at many conferences around the world. I'm one of the company's analysts. I go over earnings report, I go over stocks and everything, and I write a lot on investing.com about what you should invest in and what you shouldn't invest in. I just published an article today about Tesla, so if you want, you can go check that out to see a sample of my work. So that's me. And let's get into how to read an earnings report in 5 minutes. This is Benjamin Graham. So Benjamin Graham is maybe the father of value investing. And Benjamin Graham said that the stock investor is neither right or wrong because other agreed or disagreed with him. He is right because his fact and analysis are right. And this is most of our focus when we are doing fundamental analysis is really getting the fact and the analysis right. And a lot of time we adopt a contrarian point of view because we think that some things are not priced properly, undervalued, overvalued. And obviously, our analysis is what guides us. And as we'll see, earnings report are a big part of what guides us to make this analysis and our investing decisions. So for me, a lot of my interest in the stock market started from Benjamin Graham and from his books. So if you are interested in reading a bit more about Benjamin Graham or about value investing or fundamental analysis, I definitely recommend his books, and I can give you a list of books, like an endless list of books, but start with The Intelligent Investor maybe. I think it's a good way to start. Moving on. So today is on the agenda, we'll talk about what is an earnings report. Why is it important? Like I said, one of the focus for today is to make the reading accessible for everyone and not just for people who have already background. Right? If you take people with background, I would have made a much more advanced presentation. This is not it. This is supposed to give you a first taste and some basics on how to approach an earnings report and how to start trading after hours earnings. How to prepare for an earnings report. For me, the preparation is everything. You can solve an earnings report in 5 minutes if you know what to look for. And I'll show you how to look for and what to look for. And of course, once we get to the earnings report, we'll see exactly how we look at it and what's important and what to go there. So, what is an earnings report? So, an earnings report is a quarterly report on a public company financials. And basically, what that means is that every quarter we get to see public companies. So, think big companies, think Apple, think Amazon, and we actually get to see with a 50, sometimes 100, even 200 pages document exactly what that company did over the past 3 months. And it's a great asset because we are not in the company. We don't necessarily work there, but we want to invest there. And the only way that we'll be able to properly invest in a company is if they let us know how's the company doing and what's the revenue and what are the problems. What are the advantages of the company? Where is it better than its competitors? And this is why we need an earnings report. Now, this earnings report is SEC mandated. That means that it's the regulator in the U.S. that said that these companies need to give us a quarterly report. And the reason is that the SEC's goal is to make the stock market as even as possible and to try and cut out information advantages. Because obviously, if someone works at Amazon and has access to some numbers that the rest of us don't, they can trade that information. And that's what insider trading is when someone that works at a company tells someone, listen, this is going to happen, it's not public yet. So basically, one of the things that the SEC has tried to do with quarterly reports is to try to cut that out and that everyone will have the same information every 3 months and that we can all make decisions based on the same information and that there won't be any information asymmetry. One other thing to know about an earnings report is that it's called a 10Q, and the yearly report is called a 10K. So basically, we'll have three 10Qs a year and one 10K a year. Now, it's available online, and that's one of the biggest benefits and why we can also trade that from home today. So every company has an investor relations page, and you can go there and you can take a look there at when are they going to report. You can see a lot of other reports that are SEC mandated. We won't go into those today because there are way too numerous to count. And they're also available in the SEC website itself. So SEC has a system called Edgar, which you can look up on Google. Just search SEC Edgar, you'll find it. And basically, it has all the reports of all the public companies. And this is how you even start to think about earnings report. Where can you find them? And this is where you find them. So either on the company's investor relations page or in the SEC with their Edgar system. Why is earnings report important? Why are they important? So first of all, like I said, it's the basis of fundamental analysis. It's what we use to be able to understand the financials of the company. So if you ever heard about things like the PE ratio of the company, which is how many times its earnings are you buying it for, it's all taken from the earnings report, obviously. And everything and every ratio that we have that is on fundamental factors will come from the earnings report. And this is why it's crucial. And we often look 5, 10 years back with earnings report to be able to spot trends in company and to compare growth. So when you hear that a company's revenue grew 10% year over year, this is exactly what it is. It's the earnings report that came today compared to the earnings report that came last year for the same quarter. And we compare those to be able to tell what has been the growth rate of a company. And that helps us project forward what will be the growth rate in the future. So, a quick example, for example, we saw Twitter reporting just yesterday, and the stock really jumped on earnings. And one of the reasons that the stock jumped on earnings is two things. One, the revenue went up by, if I'm not mistaken, 18%, which is a lot. And the earnings report also give us a look at a lot of other metrics for a company. So it's not only financials. And for Twitter, we see that the growth in users is important. And Twitter has grown in double digits, I think 10% year over year in users. And so that's everything, all that information that you read in the papers about earnings are taken from the earnings report. Now, why is it important? And this is the more practical part. And this is what I do, and this is why I want to show you a little bit how it's done in Netflix. But when it ended and when it came back during the after hours trading, it fell in after hours and it went back in after hours, and in pre-market it went up some more, and it opened at $363, I think that was. So there was a big mistake done by the markets with Netflix, because when its report came, the stock tanked. But if you looked at the report was pretty good. And the growth was crazy. I think they added another 9% of 9 million subscribers when they're already very big. And we were laughing about it in the office and asking who doesn't have Netflix, like who are these new people joining the service. But they still managed to grow. And so they managed to grow. They had a very nice user growth bump. So what happened and why did the stock fall? And you can see that the stock fell, but within really a few minutes, maybe 10, 15 minutes, it reversed and went up. And this is exactly where you can make very profitable and good trades on earnings, where the earnings has an initial reaction that's the wrong reaction, which you can use to enter and capitalize on the rally once the market realizes it's wrong. Now, there's a few reasons why this happens. The most common one is algorithmic trading. So basically, the report comes out, and the machines are there at the split second sending buy and sell orders before a human even looks at it. But those machines sometimes are wrongly trained and sometimes don't really understand the report like a human that would look at it and be, wait a second, the machine says that this is wrong, but if I look at it, it looks right to me. And with Netflix, it was exactly that. It happened with Facebook before, it happened with Tesla before. So it happens quite a bit with companies. And this is kind of the major emphasis point of this presentation, to tell you that these things happen. And this is why being able to react to a earnings report in 3 to 4 5 minutes and having the expertise to be able to look at a report and be able to instinctively say this is wrong or this is right can actually be very profitable for you. And it's something that I've been doing for many years. And again, my goal here is to try to explain exactly how it's done and to give you an idea of where to start learning and looking. Obviously, you won't be able to trade Tesla's earnings today, but if you look at the reactions to the earnings, and I'll get a little bit more on how to do it and how to pick your stocks that you are going to be looking at, you will be able to do this in no time. So, how to prepare for an earnings report? And for me, you will not be able to read an earnings report in 5 minutes without preparation beforehand. So while we'll be able to react in 5 minutes to the earnings report, we have to be prepared and we have to know what to look for. Like I said, the earnings report is sometimes 50, 100 pages long, and it's very hard to be able to read 50 pages in 5 minutes and understand exactly what's going on. So basically, we'll skim it, and we know what we're looking for, and this is how we decide what we're looking for. So the first of all is create your own earnings calendar. And what I mean create your own earnings calendar is that you should know which stocks are likely to behave in a way that you can take advantage of later. Because again, it's not the first time and not the last time, the Netflix example, that something like this happens. So if it's up to me, I am looking for mainly high growth stocks, right? High growth stocks tend to be a lot more volatile, and they tend to be priced on future expectations a lot. So anything that would hurt those expectations is likely to cause a big drop in the price of a stock. And a big drop, is exactly what we're looking for generally, especially an unjustified big drop. So create your own earnings calendar. Be aware of when things are published. All right, so Tesla, for example, again, is today, and it's going to be today by it just after the market closes, so about 15 minutes after the market closes sometimes. But you need to know when that happens, because again, if you want to take advantage of a wrong move in the market, you need to be there when it happens, and that has to be live. And that's one of the maybe issues with doing it, is that you really have to be on top of what is happening when. The second thing is to do your research. What will move the stock? And that's, for me, maybe the most important part of it. So, for example, if we're looking, and I'll stay with the examples because I think that we've already established them and it's pretty good. If we look at Twitter today, the thing that drives Twitter, okay, especially in the immediate term, is user growth. So from all the 50 pages and from everything that's been said and the thousands and thousands of words that Twitter are going to write in the report, this is what matters for Twitter. And we can do the same with almost any company. We can do the same with Tesla. We can do the same with Netflix. And every company has that one crucial factor that a lot of time can really move the stock up or down. And sometimes it's not just one factor, sometimes it's two factors. And again, it varies, right? Sometimes it's it's the free cash flow that matters the most. It's how much the company will be able to make its dividend keep on growing, right? That's what investors care about. And what you need to identify is, what do investors care about? What is the thing that will make the stock move? And of course, this comes with a lot of preparation, but once you've done it once or twice, you kind of get the hang of it, and you kind of get to understand that it's pretty easy and clear cut a lot of times. Now, of course, not all companies are created equal, and not all companies will have one major factor that moves the stock. But then again, we don't have to trade every single company. Finding good trades, it's not about trading everything. It's about being able to find the best trades, and where you are most likely to make a lot of returns. So that's what this research is for me. Can I point something out? And if I can, it'll be the easiest. Another thing you have to do before that is study the previous reactions to earnings. So we don't want to get caught off guard. And of course, we don't want to pick a boring stock, right? Because if the stock moves a little bit up, a little bit down, that's not very interesting to us. We want to be able to find the big companies that move a lot. And we also, this also helps us a lot find what moves the stock, right? Because if we look at the report that it fell 10%, it fell 10% after earnings. That's okay. And then we go to the report, and we can tell that growth wasn't as high as expected. So we can project in the next earnings that the user growth is what drives earnings, because we can see exactly where the company missed expectations last quarter and project into the coming quarter. So that will help us a lot pick our stocks, and also pick our metrics that we will make a snap judgment with. Because at the end of the day, it takes more than 5 minutes to read an earnings report, but you can make quite an educated, snap judgment, especially when there's strong moves. And I tell you, when I look at reports and a stock falls 7, 8, 10%, and I look at the report, it's very, very clear to me that the market is wrong. And this is what we are trying to look at, and this is what we're trying to do. We're trying to find those 10 minutes where the market is wrong, and this is exactly how you do it. Now, of course, we do want to be prepared for the moment that the earnings are released. So we open the investor relations page of the company. A lot of times you'll find it there pretty quickly. Of course, if you have other tools such as the Bloomberg Terminal but those are very, very expensive professional tools, which I did not want to include here because again, as much as everyone has the access to the same information, there are still some small advantages that you can take that that some people have and others don't, and it'll always be like that. So we have to do with the best thing that we have, and for me, this is like the free resource, and I've tried to do everything I'm telling you now. I've done myself, so I already had trades based on going to the investor relations pages of the companies. So it's not impossible. You don't need the Bloomberg terminal. You don't need to be, 1 millisecond ahead of the markets. We are counting on the people being 1 millisecond ahead of the markets being wrong. And that doesn't always happen. There's a lot of times where the company actually releases a report, the algorithms or the people who are high frequency traders get it right, and there's nothing for us to do. But many times they are wrong, and these are exactly the people that we want to catch off guard. And now the earnings report is finally here. So there's two things that are interesting for us. First of all, like I said, when I want to show you how it looks like when you go to an earnings report and what you'll see when it goes live. So first of all, let's just get familiar with the web page. So I'll go back a little bit. I won't go exactly into this, just to give you an idea, because again, I promise that this will be suitable for beginners, and I don't want to get, I want to show you exactly how to get to that page. So this is Tesla's investors relations page. It gives you a little bit of the description. It gives you the presentation. So while you're building your earnings report and your earnings calendar, sorry, you can tell exactly when the report is going to be, when it's going to be released, and where. If you want to go look at previous events and presentations, you can find them here. But if you trade on earnings, I think you do want to get yourself acquainted with the website that you're going to be looking at. So this is the events, and what we're looking for, and basically what I open is for Tesla, this is what comes out first. On their earnings page, you'll find the Q4 update letter. And this is where the link that I sent originally sent to. So this may be the first thing that you see when a company reports earnings, right? So we take a look, it's a pretty big file. And of course, if you want to read all that, it's kind of problematic. There's a bunch of numbers, and this is what you get. And you need to be able to make out of all of that what to do. Now, of course, everything here is important, and everything here factors into different models, right? So different people have different ways of valuing companies, and they use numbers from here and there to be able to do that. Now, this isn't the most technical presentation in the sense that we will not go into what is net cash flows from debt activities, right? That's for another. Let's take a look at the text, and we know what the company is expected to report. We know what moves the stock, right? So some of this is just not important for the 5 minutes where the stocks comes out, right? If you know that, capex generally maybe is not what moves the stock, but if we look at a better operating margin and we notice that in the past this is what we were looking for, right? When it comes to Tesla, I think that a lot of times the earnings are maybe less of a factor, and it's more the deliveries that we care about. So if we look at their sales of vehicles, and just by scanning and knowing what you look for, so for example, Tesla, I'm looking at how many they sold. So this is what they sold. This is what they sold in the US in 2018. We look at the financial performance, and you can really get a sense of if the company should go up or down just based on looking at the numbers. Now, we want to forget the deep analysis for a second and make a snap judgment. And again, I said this before. it takes time and experience to understand exactly how it's done, but you can always practice this without actually putting a trade in. And this is what is great about investing. We have a portfolio, we have a dummy portfolio where that you can open and you can take a look and you can place trades that won't really risk your money. And you can always train yourselves to do this. So Tesla might not be the best example, and I'm sorry about that, because again, it doesn't really move on earnings. Let me see if I can, you know what, let me see if I can find Twitter's page and actually maybe look at the report that they published yesterday. All right, so see, a lot of times it's even right up there, and it's very easy to see. The second page of Twitter's earnings is their user growth. Okay, Twitter knows that this is what Wall Street cares about. Okay, and Twitter knows that, especially if it had a good number, and 11% is a good number after a couple quarters of nines, and this is why the stock jumped 15% yesterday. Nothing else but this one slide. Okay, now it takes time to soak in sometimes, because what, 15% based on one number? And the answer is absolutely. Absolutely. When it comes to Twitter, it's user growth above all. Everything else is nice. But if this number is a good number, you can bet that the stock will go up. And this is exactly where we made this educated guess. Say we had a good user growth number yesterday, but maybe not so good revenue numbers, even though the revenue numbers were okay, and the earnings actually missed yesterday with Twitter, which is interesting. But just giving this number itself, that we know where to look and we know when it comes out, we're able to make a pretty good educated guess about where the stock should go. So this is a very, very clear cut. And again, Tesla is not necessarily a stock that you want to trade on earnings, but Twitter is definitely is. And Facebook definitely is. And I think that generally all companies that rely on user growth, it are great, great, great candidates for earnings trades. So this is the letter itself. Let's go back to the presentation. And of course, we have the report itself, which is very complicated. I will go over a little bit just to give you an intro to earnings reports to those who aren't familiar but still maybe would like to know a little more, because this webinar is really about my little system to trade earnings. Right? And it's hard to take what you need from an earnings report in 5 minutes to make a good decision regarding a trade, and when to believe that the market is wrong and not to go with the market. So this is Apple's report. So remember what I said, it could be 50 pages long. This one happens to be 50 pages long. Now, if you happen to go over one of these, what do you know about Apple? Your preparation is everything. So I'll tell you what I know about Apple. I know about Apple that first and foremost, what I care about is how the iPhone did. It's always been that. It's always been first the iPhone, then the rest, because the iPhone is still a very, very, very big part of Apple's revenue. So you can actually just Control F iPhone and you'll find what you need in a heartbeat. All right, so let's do that right now live. There we go. So Apple actually gives you revenue for the iPhone. And here you can see that while other things did pretty well, the iPhone didn't do so well. And that's always a point of concern. And that is an immediate red flag when it comes to Apple. And that's like the one number that can give you a red flag or a green flag just the second you look at it. And this is what you always want to try to do. Find that one number, or find those 2, 3 numbers that give you a direction of positive or negative. Because again, we're not trying to trade the earnings where the stock falls 2% and we think it should fall 3%. We're trying to find cases where the market is absolutely wrong, and when the stock drops 5% but should actually go up 5%. And again, this has happened before a lot of times. I think the most I've seen was maybe a 15% gap in Facebook within 10 minutes. 10 minutes, the stock went down. You could buy it low and actually you write it up about 15% in 10 minutes before, because the algos were wrong, and it was there. And I was on it that day. So I told you a few names, Facebook, Twitter. You can continue to search for those. I obviously don't do that all the time, and I don't have all the names, but it's definitely something that, if you're interested in it and trading earnings, then I recommend you check out. So I didn't want to make this webinar too long. I didn't want to take too much of your time because I really don't think taking too much of your time is necessary. I do want to go more in depth about earnings report and maybe how to do a more comprehensive analysis. And I'm sure that we'll get to it one day. But for now, like I said, this is more of a proof of concept of investing.com coming forward and trying to show maybe a little bit more of our knowledge as analysts of investing.com, and not delegate everything to third parties. So final thoughts. Earnings report are essential to good analysis. I've said this before. Everything I look at, some people look at charts, and are into technical analysis, which is okay. I've always believed that in the market, as long as you make money, as long as you're profitable, you know, that's the ultimate I told you so. That's the ultimate being right for me. So if you're making money trading technical charts, that's great for you. I've been successful with fundamental analysis, and for me, my success always came from earnings report. So being able to take a good look at an earnings report is essential if you're trading earnings, and it's essential if you want to initiate long-term positions, either long or short. Initial market reactions are sometimes wrong, and this is what we're banking on. And if you find a stock that is down, or up 5% after earnings, it's worth your time to go to that company's investor relations page and actually take a quick peek at the numbers, especially if you have some prior knowledge, right? Because when you just start, it's hard. Why is it hard? It's hard because everything is new to you. You don't know much about the company. You've never really heard of it. But as you go on and as you do this more and more, and as you're involved in the market more and more, just by, trading a little bit, investing a little bit, reading up what people say about things, it gives you an idea even on stocks that you are not very, very familiar with. So I haven't done analysis on Alibaba, for example, in the past 2 years. I think that 2 years ago, I looked at it, I actually wrote a report, and I haven't touched it since. But now, if Alibaba comes out with earnings, I can most definitely take a look at the report and be able to say if it's wrong or if it's right, and if the stock moved in the right direction or the wrong direction, just by looking at this year's numbers, last year's numbers, and make a snap decision. So it's hard at the beginning, but it gets a lot easier with experience, like everything. It gets a lot easier the more time you put into it, the more effort you put into it, and the more knowledge you have of the general market. The third thing is to identify high volatility stocks. And this is for me maybe where it becomes more practical to be able to tell what moves a lot, and to be able to tell why it moves a lot. I'm already jumping to the fourth point. Those are the two most important factors in trading earnings profitably. Okay. And I know that a lot of people think that trading earnings is, just going with momentum, and if it went up, you buy, and if it went down. But for me, it doesn't work. And again, it doesn't work because you are never the first in line to make your trade, and the market reacts instantly to earnings reports. So you will never, from the comfort of your home, be able to trade before the computers at Goldman trade. That's not going to happen. So trading earnings is really trading wrong initial reactions to earnings. And I'll say this again because it's important, and I find that a lot of people make the mistake of thinking that they can look for an earnings and they can beat everyone to the punch. You can't beat everyone to the punch, but you can outsmart when you can outsmart them when they make a mistake, and this is the most important part. And the last thing, of course, is eventually to find an occasion and to pounce. And the first trade is hard. And if just a tip on after hours earnings, after hours trading. So after hours trading has less liquidity, which is often a problem. But if you're trading, small quantities and you're not millions of dollars in, it shouldn't matter to you. Trading after hours, which is of course necessary to be able to trade earnings, is very broker dependent. So some brokers will open after hours trading for you, some won't. Some will charge you extra money for it. Okay, some won't. So it's very important for you also, and it's something that probably should have been in the presentation but isn't. But since it's coming to me now, I'll tell it. To check with your broker how it allows you to trade after hours and at what cost. And once you do that, and once you know when you can trade, how you can trade, the logistics obviously are a big part of it. And then it's just finding the guts to trust yourself and do it. Because I've talked a lot about snap judgments while making this presentation. And at the end of the day, with experience, and when you know yourself and when you know your style and when you've been doing this for a while, or even as you're starting and it becomes so obvious to you because you've looked at a lot of cases before, you start to really feel it in your gut, and you start to really see how the experience guides you. And the good thing, like I said, is that you can do this without risking a penny. You can find opportunities and not necessarily go and enter a trade. And this helps you build that experience and build that confidence without even putting a dime at risk. So that's great. And find an occasion and pounce. Let me tell you, I think that your first trade is definitely your most exciting one in a way, because you're stepping into something that's quite of an unknown world. So definitely, as you start trading, make a wise use of stop losses. Right? This will not be an intro to trading. We might do this as well at the end if there's demand. Do another webinar like this. This is not what it is. This is just to show you exactly how to trade earnings and wrong reactions to earnings. So find an occasion and pounce. Now, I'm ending the webinar now. I think it's been about 40 minutes since we started, which is a good time, and it pretty much where I wanted to keep it. So I'm giving you my contact on Twitter. I think that my direct messages are open, so you can also reach me there. You can, of course, find me on investing.com. You can find my analysis on investing.com. You can find my analysis in a bunch of other places. And really feel free to reach out to me. I really like this education part of the job, and I'm really happy that I've been asked to give a webinar. And so feel free to contact me, and please, feedback. I love your feedback, and it's always great to understand what people liked, what people didn't like, what people would like to see more of. So if you have anything like that, please, 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 please feel free to reach out to me in any context. You can even drop a comment of one of my articles, and it's totally okay. So I have a question box here, but I haven't seen questions pop up during the presentation, which I don't know if it means that you didn't have any questions, or if it means that there just aren't any questions or technical difficulties. So if anyone has a questions, you're welcome to ask it now. And if you don't, then we'll end it here. Again, I was Clement Thibault. You know where to find me. And thank you for coming today. And again, please feedback if you want to see more of these. Your feedback is crucial for even for me to go up to the bosses and tell them, listen, there is demand for this. People are interested. So if you do, please give us some feedback. All right. Have a great day, everyone. I hope that Easter was great. And I'm sure that I will see you in the future doing another webinar. So I'm ending the presentation. And thank you very much for being here with me today.